Welcome to this brief introduction to the White Label Restaurants strategy game. The business situation that teams are taking on with this game concern a mid-market restaurant business operating close to local residential areas rather than in town centres or on highways. The target market segments are principally adult couples roughly between the ages of 25 and 50, usually going out for a nice evening meal on a Friday or Saturday evening, but also targeting families for earlier evenings and weekends. The value proposition of this restaurant business is that it makes a big issue indeed of very interesting restaurant designs and a menu that is both extensive and constantly changing. And it ensures good service by always making sure there are plenty of service staff around. The history of the business that the teams are taking on is that the restaurant operation was originally started by an entrepreneurial couple who opened a first restaurant and then grew it until they had 10 restaurants operating, at which time the corporation for which your team works bought the business to add to its portfolio of other restaurant and hotel operations. In this particular scenario, something we call the perfect start, you are taking over from a previous management team who built the restaurant business to 74 restaurants and achieved pretty strong profit growth. The team's challenge, therefore, is first of all, don't break it, make sure you manage to sustain that profitability, but then beyond that, they need to continue strong profit growth. To get started with the game, it should already have been installed on a PC, and you'll find the game on the Start menu under All Programs, Strategy Dynamics, White Label Restaurants. When you first open the game, you should see this screen where you have the option to first of all choose to display the game in English or Spanish, and you can also set a currency option. It doesn't actually make any difference to the way the game plays. Click on the Start button at the bottom, and on the next screen, unless your instructor has told you otherwise, select option A and click Next. Read the introduction that follows, which explains a little bit more about the business, and at this point select the Open Challenge option at the bottom. From the Challenges Available window, click Perfect Start, and you'll see a brief description of this challenge in the window in the middle. When you're ready, click Start Selected, click OK, and you're ready to go. If, by the way, you've not unlocked the game, you'll be able to unlock it from the File menu, File, Unlock, enter your registered name and unlock code in that window, and click Apply. When the game opens, you see on the left a decision window where you enter the decisions that control the strategy of the business, and on the right you'll see a summary report about the state of the business that you're taking on. The clear space in the middle is to allow you to open up tables, reports and charts that you may want to use to help you run the game. So what's the situation we're in? Well, the business has been developed very successfully during the nearly 4 years since your corporation bought it. Remember, you're taking over the business at the end of the third quarter of year 4. Even better, no competitor has spotted the same opportunity or been able to attack your business. So your challenge is to continue that success. Checking the summary report, you'll see that you have 74 restaurants, having just opened 12 units in the latest quarter. These restaurants are taking more than $90 million per year in revenue and making profits of nearly $22 million a year. After the company's central costs, the business is making about $19.5 million. Now, this is an outstanding return on capital for each unit and a great profit margin, return on sales, of over 20%. These may seem very high profitability ratios, but they are not at all uncommon in the restaurant sector, where entrepreneurs manage to find a particularly attractive positioning for their restaurant in a local area. It's rather more difficult, of course, to sustain such high levels of profitability and return on capital for a much larger business. If you look towards the bottom of the report, you'll see the average restaurant is selling nearly 1,600 meals per week, and customers report that they feel they're being offered really great value for money. A value of 1 on value for money is great. If you get over 1, it means that customers are positively delighted with what they're getting. The decisions window over to the left, shows the decisions taken by the previous management team for the latest quarter before you took on the business. The average meal is priced at $11.40, so the restaurants must be offering great food and service and a nice environment. You can see what percentage of revenue your predecessors chose to spend on labour, maintenance and marketing, and they spent $700,000 a year on developing the menu for all the units. The business has a central menu development team, and that's the cost of that team, who work to make sure that you're constantly introducing interesting menu items. The previous management also asked corporate headquarters, which we'll call HQ from now on, for $6 million in capital to open the additional 12 units they bought during the last quarter. Restaurants cost about $500,000 each to open, although they may get more expensive as you grow the business because good sites become more scarce and difficult to find. HQ are happy to invest so heavily because of the strong profitability that's been achieved, and they could offer still more each quarter if you continue to do well, but they could also limit your capital if you fail to do so. How has the business come to be in such great shape? Well, click on Graphs, Business Growth, Meals Served per Restaurant, and a little chart opens up showing you exactly that number. How many meals per restaurant per week have been sold? You can stretch that graph to make it a bit more readable. And it looks like the restaurant's average sales rate didn't change very much for the first couple of years, but is now growing strongly. That's great news, of course, but you might ask yourself if it could cause some problems of any kind. If you click Reports, Restaurant Profit and Loss, you'll see the restaurant P&L, or income statement, shows how well each restaurant is translating the strong sales rate into profits. You may note that the cost ratios do not precisely match the decision values, and that's because the business is actually changing somewhat during the quarter, so a ratio you picked at the start of the quarter may have slightly changed because of growth or decline in sales. Notice also that the restaurants track their results week by week, while your management team and HQ have a longer time horizon. They're looking at performance in terms of the annual rate of sales and profits at the end of each quarter. You can explore other information that's available under the Graphs menu, the Reports menu, and the Tables at the top of the screen. Maybe you'd like to see in detail how the average profit per restaurant has changed over previous quarters. Click Tables, Profit and Loss, and a warning appears explaining an important feature of the way the numbers are reported in these tables. Click OK to see the table of data on profit and loss. Information for the average restaurant is shown at the left, and for the business as a whole to the right of this table. You can simply scroll across with the scroll arrows to see more information to the right. You may want to see that profit trend as a chart. So if you double click the heading, profit per restaurant per week, that chart opens up, and again you can stretch the chart to a size that allows you to see exactly what's going on. The same trick, by the way, works for anything else in the table. Double click the table heading and the item will appear as a chart. So now it's time to get on and make some decisions. So let's explore some decisions. First of all, in the decisions window, let's see what would happen if we were to increase our marketing spend from 1% of revenue to 3%. So highlight the marketing spend box, change the 1 to 3, decide what it is you want to look at on the reports and charts, and then click Run at the top left. You can see that profit per restaurant has grown again, although rather less quickly than it did previously, and the meals served per restaurant has grown yet again. Looks like that worked out okay. You see a message that tells you you have been awarded a big bonus for your performance in that quarter, but you might wonder whether some other decisions could make things even better. Click Simulation Go Back or Control G, and the game undoes the decision you just took. What we suggest now is you try out some other changes to decision values, both on their own and in combination, to get a feel for their impact. Maybe, for example, you could make the business still more profitable by cutting the percentage of sales you spent on labour. The idea here is to get a feel for the impact of the decisions you're taking. End up by going back to year 4, quarter 3, and if you've gone forward more than one quarter, you will have to restart the challenge from the File menu. File, open a challenge, 1, perfect start, read the warnings, and the game restarts in the same situation you took on in the first place. Now you may be wondering where that bonus came from that you were awarded when you first tried that decision of increasing the marketing spend. Well, if you click Graphs, Targets and Capital, Company Profit versus Target, you see a chart of the company profit. That's the profit from all the restaurants minus the costs of the central operations. And you'll see another line alongside that, which is the target profit being set by headquarters. So it looks like the previous management team kept beating the profit target set by headquarters each quarter, which is why you were given that bonus when you tried the same thing. The higher the profit you achieve each quarter, the more HQ will expect. Watch out though, because if you come in short of target, HQ will not be pleased and you'll get a warning. If you keep missing the profit target, headquarters will get increasingly angry until you get fired. If you want to see just how angry they are, then under Graphs, Targets and Capital, you'll find a chart on the danger of being fired. It looks like your previous management team somewhat annoyed headquarters in the first year or two, but as they started to constantly beat the profit targets, headquarters' annoyance with them faded away until now there's virtually no danger of the management team being fired. The bonus or warnings you get reflect headquarters' feelings about how much they support your team's efforts. This is something we call an intangible resource, headquarters support, and this in turn affects how much capital they're willing to invest as well. They're also more willing to invest in a bigger business, which has already shown it can invest large amounts of capital. But you don't have to spend everything they offer. If you think it's not a good idea to invest too much, you can request less capital than headquarters would be willing to offer and open fewer restaurants than you would if you took all the capital. Finally, note that the quantity of restaurants themselves, a very tangible resource indeed, is added to by the capital you spend. Not every restaurant is equally successful, so each period some restaurants are sold and the cash is added to what you spend. So now you've got a pretty good idea of how the business has kept up its high rate of performance. Your challenge is to sustain that record if possible and certainly not damage it. Strategy implementation has 2 components. First, we've got to decide what performance we're trying to achieve and over what timescale. Secondly, we've got to work out how we're going to do it using the decisions we make. The first question then is what your aim should be. Now, there are many possible answers to this, both about what performance outcomes indicate success and the scale of numbers to aim for on those indicators. You may also want to set targets for supporting aims, things that need to go well if that performance to be achieved. There are some blank charts for you to fill in which you can sketch your objectives for the business. For example, you may want to sketch what's happened to total company profit over time up to the point where you're taking over the business, and sketch a future trajectory of what you would like to see happen. In this case, we've sketched 2 alternative futures, one in which things go really well and we get continued profit growth, and one in which things do not go so well, a feared future if you like, in which things go badly. You may want to add some supporting indicators, for example, the profit per individual restaurant. In this case, we've acknowledged that there's a limit to how much profit you can get out of a single restaurant. And you can add further time charts. You might want to track service quality, for example, or meals served per restaurant, or any other indicators. So fill in one or more of the charts on that page, making sure to start by sketching the history of your chosen indicator from the game and setting an appropriate scale for your objectives, which may need to be bigger than the scale that you see in the game. It's also possible that your instructor may set objectives for you, or they may leave you to set your own. Now you steer towards your objectives by making decisions, but that doesn't mean you forecast all the values of every decision for every period and stick to those numbers whatever happens. Instead, what happens in practice is that you have policies, rules or guidelines that you use to work out what the next decision's going to be. In practice, such strategy policies are rarely written down or clearly stated, although it's usually a good idea to do so. Now, to make your particular decision, you have a target in mind for some factor, let's call it an indicator, that the decision may affect. So to decide on the percentage of sales spent on labour, for example, you could have a target in mind for service quality, say 0.9. You look at the current value of that indicator, say 0.8, work out the gap, in this case minus 0.1. You then refer to your policy rule, which could be, quotes, if service quality is less than target, increase the labour cost by 1% of sales. You look at the result of that decision, that is the value of the indicator at the next point in time, and grow through the process again. So for each decision item, select one or two indicators affected by the decision, select a target value for each indicator, and write a summary policy rule that will inform your decision in each period. And we provide in the user guide a simple table for you to complete. So now it's time to deliver results. You now understand how the business works, how it makes money, how the decisions you make affect its performance, and you have a strategy. What you should do now is implement your strategy, making decisions for each quarter, and trying to hit the long-term objectives you set or were given by your instructor. As you run the strategy, there are some things you might find useful to do. One very useful thing is to save the game as you go. Simply save it, click File, Save Game, give it a name, saving it to a location you'll be able to find it again. This allows you to try alternative strategies either for the whole challenge or starting from a certain point in time. So, for example, I may run the business for 4 quarters into the future, following exactly the same decision rules that we had in the first place, and see how the company profit against target has been going. Now it looks as though I'm beginning to struggle to keep profit going forward, so I can save the game at that point, continue to run with those policies and see what happens. Then if I want to, I can reopen that game from File, Open Game, and try an alternative set of policies. Perhaps this strategy would have been better if I'd spent less on maintenance, maybe 2%. Remember that you still have the go back option to undo any mistakes in entering decisions, but you can only go back 1 quarter from any point. When you've implemented your strategy, you can compare it with what you intended. Get out the time charts of performance that you sketched earlier, including the targets you had for the future, and sketch on top of those charts the results that actually happened. So some questions for you to think about now are: how far did your performance outcome differ from your aims? You could, of course, have done better than expected as well as worse. If you were corporate headquarters in this situation, or an investor in the company as a whole, how would you feel about the management team's performance? Then you should ask yourselves, what were the top reasons why your results differed from what you expected? The business is entirely transparent and under your control, so what did you do that caused these differences? Finally, you can review the policies that you use to guide your decisions, which worked well and which not so well. Were there missing items that you should have been tracking? Did you track items that were not really as useful as you hoped? Could the policy rules you set have been better? And what policies would you set now if you were to try the same challenge again? Now, for effective learning, we strongly recommend that you try this game more than one time. It's a good idea to have another go at this same perfect start challenge, but then there are also some other challenges that you may find useful to take on. Perfect Start is about the easiest of the challenges we offer in this game. Others include Rapid Takeoff, which is a very tough challenge indeed. The previous management have delivered what looks like very strong profit growth, but there's a big issue about whether that growth is sustainable or not. In Challenge 3, which is called Wake Up, As the name implies, the previous management team didn't do very much, and your challenge is to get the business profitable and moving forward to deliver profit growth. In Challenge 4, there is a new threat from another restaurant business that's after the same market segment as you are, and you need to beat them in the race to exploit this market opportunity. The business actually simulates the whole life cycle of the market, from early startup to rapid growth and into maturity. So Challenge 5 looks at hitting the limit where it's getting more and more difficult to find good restaurant sites to open and continue to grow profits. So the issue here is to think about how you can extend the reach of the business and continue to grow when it's getting more and more difficult. Challenge 6 is a very tough challenge indeed. In this case, you're taking on the business after a previous management team has really got it into serious trouble. You may need to actually hit the go back button before you even start on trying to solve this one. And Challenge 7 is another mature market scenario in which further trouble is coming, and you need to work out how to continue to deliver profit growth. Finally, you can actually start the business from the point in time where your corporation took it on, when it had only 10 restaurants. And one final option is to create your own challenge. You can run the business in any way you like up to a particular point in time, save the game at that point, and then share that saved game with other people so that they can try a challenge that you've designed. That brings us to the end of this short demonstration of the White Label Restaurants strategy game. We very much hope that you enjoy learning some more about strategy implementation by playing with this game and exploring the challenges that it offers.